Hello, everyone. Welcome. Thank you for joining our webinar today. This is the Automated Future, Digitalization of Trade and Supply Chain Finance. If you'd like to pose a question to our panel, please submit questions via the Q&A box. This webinar is being recorded. Our panel moderator today is Michael Walker, Head of Solution Banking at Finastra. Mike, over to you.
Thank you, Sabra. And thank you for the introduction. As Sabra says, my name is Mike Walker. I'm Head of Solution Enablement for Corporate Banking at Finastra. Prior to that, I was the Senior Product Manager for Trade and Supply Chain Finance at MISIS. And then prior to joining MISIS, I worked in Trade and Supply Chain Finance on the bank side as well. So most of my career has been spent in this area. I believe that everyone on the call will know that this area is really a hot topic in terms of emerging technology and digitalization. It's seen as being ripe for disruption. And there's two aspects that potentially we can explore. One is the digitization of current processes, which are very manual and very paper-based. And then there's the digitalization of the processes and looking at emerging business models and changing the way that trade and supply chain finance business is conducted. I'm absolutely delighted to have some guests joining me today. So we have Adriano Dariva, Senior Vice President at Lloyds. We've got Rob Barnes, who's the CEO of TradeIX. We've got Carol Chiu, who's Senior Vice President at Premium Technology. And then we have Jeffrey Turner, who's on the senior technical staff at IBM. I won't pretend to be able to do justice to their previous careers and their experiences in the individual areas. So I'm going to hand over to Adriano first, followed by Rob, Carol, and Jeffrey to introduce themselves a little bit more before we go to our first polling question. Over to you, Adriano.
Hi, everyone. My name is Adriano, and I currently work at the Lloyds Bank based in New York, and I'm in charge of developing and promoting solutions within the working capital trade finance. I have been in this industry for 20 years, starting my career back in Brazil and within the legal sector, and now moving on the product and the sales side. So very excited to be part of this panel and look forward to have a good conversation with you all.
Hi, everybody. My name is Robert Barnes. I am the CEO and one of the founders of TradeIX. We're a startup in this space. My career spans trade for a little bit over, not over 20 years. Previously, I was the founder and developer of the trade finance platform or supply chain finance platform at Prime Revenue. Our focus is on using at TradeIX AI, blockchain technology, and cloud to deliver trade as a platform to banks and large corporates.
Hi, I'm Carol Chiu, Senior Manager from Premium Technology. I'm responsible for the sales and business development and marketing of our FinShare product solution. It's supply chain finance platform solution. Prior to joining Premium Technology, I spent most of my career in both consulting, focusing on the transaction banking and the supply chain and open account space. I spent like more than 10 years in the banking. That is when I first started focusing on the open account and the supply chain finance area. And I'm very happy today to be here to joining the team to discuss the digitization of trade and supply chain finance with you all.
Hi, this is Jeff Turner. I am an executive consultant in IBM's Digital Business Automation Services division. What that means is I work with our clients developing solutions around their data and content, most recently working with large banks across the globe on trade finance digitization of their processes. And I have a career in economic consulting and management consulting, which I did for many years with a variety of industries prior to joining IBM.
Thank you, Jeffrey, and the rest of the panelists for those great introductions, and looking forward to speaking to you all in more detail as we go through the next 50 minutes or so. I think everyone will agree that digitization and digitalization of trade and supply chain finance is a very broad topic that has been covered in a number of different ways and from a number of different angles over the last few years, certainly. So hopefully we can bring a new angle to this discussion, and rather than focusing on the technological aspect of things like distributed ledgers and artificial intelligence and natural language processing, which everyone will probably agree does what we want it to do within the trade and supply chain industry, we'll hopefully focus a bit more on what are the challenges that we face in bringing the digitalization of trade and supply chain to fruition, and what changes need to take place within the industry and within banks and corporates and vendors as a whole in order to land the digitalization of trade and supply chain in a safe and sustainable manner. So without further ado, we'll move to our polling question, which is, what are the biggest challenges banks are facing today in trade and supply chain finance? Is it the inability to expand into other markets? Is it multiple trade and supply chain systems leading to disjointed services? Is it the investment required to remain SWIFT compliant? Is it unstructured data hidden in paper documents, or is it one of another reasons? So if we can all ask you to vote now on the screen, and we will discuss the results with the panel. Okay, so whilst some of the other results come in, you'll see that we have 7.4% of people saying the inability to expand into other markets, a large portion saying multiple trade and supply chain systems leading to disjointed services. That's over 55% of respondents. 11% of you said that the investment to remain SWIFT compliant was the biggest challenge in trade and supply chain, whilst 22% of you said that in unstructured data that's hidden in paper documents is the biggest challenge. So I think if we go over to our panel, and perhaps Adriano, we go to you first. What do you think about the results? Is there a particular one that you would like to pick up on?
Sure, Mike. Definitely. I think the results, especially the majority of the response towards the results, is not a surprise when they say is the diversity of platforms, the diversity of access. One thing I can tell you for a fact, and I hear more and more from colleagues in banks and clients, corporates, there are three things that really are affecting the market nowadays. One is the access/structure, so how corporates have access to this solution and platform. The second important point is the service, which relates different banks provide different type of services, different type of arrangements, different type of legal documentation. And the third point, which is the last but not the least important, which is a diversity to access liquidity. So clients are more and more concerned to say, listen, we need to make sure if you go into that platform or if you go with that provider will enable us to have diversification in terms of liquidity for our program and for our trade flows.
And I think it's an interesting one, Adriano, in particular, in this world of open finance and open banking, that actually, the user experience that's potentially going to be looked at or looked for from a corporate's perspective is not just going to be for a single bank and disjointed services within a single bank. It's going to be a disjointed services and across multiple banks, and having a single view across all of their transactions across their different banking relationships.
Correct. And I think this is one of the biggest challenges, right? And it's something that banks, tech companies, technology providers need to sit down and discuss sooner rather than later, because this is something that is a regular conversation is happening now, and banks and clients together with tech companies need to find a solution for that.
Okay, thank you, Adriano. I'll open the same question to the rest of the panel before we move on. Were there any other comments against the responses that we had to the polling question? So just as a recap, 55% of people said that multiple trade and supply chain systems leading to disjointed services was the biggest challenge, while 22% said unstructured data hidden in paper documents was the biggest challenge. Any other comments from the panel before we advance?
Hi, this is Jeff Turner from IBM. I'd like to address the 22% of the unstructured data found in paper documents. And this is an area where I've been working with clients and talking to banks across the globe. And this is an area that, we talk about in terms of digitization and trying to get that information in the paper documents into a usable form so that you can then use it in those downstream systems. And as I think we're going to talk a little bit later today about all the advanced technologies such as blockchain and some of the other systems, if you still have it in paper, how do you overcome that challenge? And I can tell you that there's technologies that are now available in analytics and digitization that enable us to extract that information and solve that first step of challenge before we do the getting into trade finance.
Agreed, and I think it's interesting from my perspective that the likes of natural language processing and artificial intelligence have been around in various guises for a long time, but it's really been in the last few years or so that these have been considered available at an enterprise level and to be able to be deployed at scale within the financial services industry itself. So something we can certainly discuss later on when we talk a little bit more detail about the technology. But Carol, if we come to you first, so often we tend to focus on trade finance as the area that's ripe for disruption from emerging technologies. As we've discussed, very heavily manually intensive and paper-based, and to a certain extent, supply chain finance has already been digitalized through the use of e-invoicing and being able to upload invoice data from ERPs. We also know that traditional trade finance volumes are plateauing and the open account space is growing. Why is it that you think more companies, from your experience, are going to the open account space? And is user experience a factor, or is it something else within that?
Yeah, I think that is, based on my experience, I would say that is like 4 key drivers really in the last, I would say 15 or 20 years that is like really pushing more corporate going over to the open account from the traditional trade, right? User experience definitely is one of the reason. When you look at the traditional trade, it's very paper intensive, and it also is relatively costly So a lot of corporate, was looking to move away from the traditional trade and go into, the open account that is more simplified and also digitized, right? But what is making it possible is also really the globalization or the evolving of the technology that is really opening up the export market, which was not accessible in the past, which is a great thing. Nowadays you can trade with, supplier or vendor out in not only China or Cambodia, Jakarta, Cambodia, those places, but then you create a more intense competition, which is you're giving like buyers, largest corporate buyer that is in a development country, that they have the bargain power to push for the open account terms. Okay. So that is the one thing that is driving that as well, right? But I think the biggest driver is really going back to, from a corporate perspective, they are all looking to how they can improve their working capital, right? So they're leveraging the open account, moving from traditional to open account to negotiate better terms with their counterparty, okay? And then the another factor that, is really driving the change also, in the last 10 years, the supply chain financial, we're seeing more supply chain finance program that is available, to back up the open account trade, right? So the supplier no longer need the LC in order for them to get funding or mitigate the non-payment risk. They can just, whenever a large corporate, when they trying to convert from the traditional trade to open account, they always bring along with a supply chain finance program, which is, would protect their existing supply chain network, right? That they would get the necessary funding, but at a lower cost, but also in a more effective way doing it instead of going through the traditional trade where you need to submit a lot of documentation in order to get a transaction completed, right? One of the key things that we are yet to see is that I think it's the DLT. I think in the next few years, if the adoption, right, if we see significant adoption in the DLT, we definitely will seeing, we're going to turn the whole the traditional trade. Will create a huge change, right? Because you really don't need a middleman if the DLT technology is being adopted by both the importer and exporter and the bank itself. So that is the key driver that I see for driving the movement to the open account.
Yeah, and I'd agree with that, Carol. And one thing I believe is a key driver as well is if you look at the traditional role of a bank in these types of transactions, it was ultimately to be, a risk mitigator or a guarantor of payment. And actually now in the world of big data and other third-party services that are available to make payments, it's much easier for a corporate to find out that information and manage that risk themselves than potentially going through the bank on a structured trade basis. We'll talk a little bit more about DLT and the initiatives that in particular TradeIX have got going on in that space a little later on. But I think from my perspective, DLT is easier within the supply chain finance space because at the moment the rules around traditional trade finance are geared towards paper documentation and where there's a clear delineation of liability as you move through the transaction. And with one of the principles of distributed ledgers being shared control of data, ultimately that means in some way shared liability and those rules will need to be adapted to reflect that, and we'll be able to explore that in more detail later in the panel. But opening up that first question to the rest of my panel. Any comments on or challenges to Carol's feedback on that before we move on? Okay, so I think we'll take that silence as a cue to move on. And Adriano, if we come to you and specifically looking at what corporates want, how are corporates looking at these changes? What's their perspective? We're also seeing banks changing the way they do business in terms of the cooperation and the network effect that they're bringing to the table, which was really unprecedented previously in this industry, where they were siloed in the way they wanted to grow market share. So really two questions there for you, which I'm hoping you can provide some context for us on, given your role within the industry.
Thanks, Mike. I think the key thing here, how the corporates are looking at these changes, more than ever, they are looking at their banks to provide a solution that not just incorporates the challenge they have on the domestic market, but also international market. Give an example. We deal with international clients, multinationals, on a trade, supply chain finance, receivables. We're talking about counterparties in different countries, different jurisdictions. And what they do is they come to the bank and said, I need a solution for that. I need you to help me to address my supplier working capital needs. I need you to help my personal working capital needs in trade. One thing that we see clients they find sometimes amazing is that different banks with different systems cannot communicate among each other, especially on the trade side and the supply chain finance. And because they're getting now familiar on the cash management payment side where system can communicate. And I think the next steps, they would like to see something happen on the trade, supply chain, and receivables, a more dynamic, effective. When I say communication, is not a swift message from one bank to another. It's more a quicker, more transparent, and more effective way the communication happen between the banks, so clients and their suppliers and importers can have a better utilization and advantage on a trade and a working capital piece.
Okay, and I think, again, from my perspective, there's really three barriers to digitalization which we can explore in this panel. One is the technological aspect and the advent of new technology, which we've been discussing. One is the regulatory and standardization of these types of technologies and these types of transactions, which again I believe Rob can provide some context on, particularly with their work with banks, with their Marco Polo initiative. And then the third is a cultural element, is how do we deliver an environment where people are comfortable with the way that digital transactions work and move them through different ways of doing business and different ways of working to get people comfortable that digital transactions are safe and secure in the way that paper transactions previously were. So again, back to yourself, Adriano, is the regulatory environment still a big challenge for banks in relation to digitalization, in your opinion?
Absolutely. And I would add on one more thing on top of that. I think the regulatory is one component, but also the structure where the banks have been set on. Banks tend to be very bureaucratical internally. And if you compare, for example, how long a bank takes to kick off a supply chain finance platform versus a tech company, there's a huge difference there. Once again, it's because of the regulatory environment the banks are set in, and also the internal format the business is being set on in a very bureaucratical way, especially larger banks. I don't know if you agree to that, Rob.
Totally, 100%. I do agree to that. So I think at the end of the day, the advantages that you come with a more distributed, real-time form of sharing and trust, actually ends up giving the opportunity to really expand the trade, to expand trades, and actually, if you like, start to really drive forms of standardization, which aren't just necessarily around, having something extremely structured. I mean, you can have, it sounds like an oxymoron, but you can have unstructured standardization as well. So I do think the work that banks and fintechs are doing together in this area, particularly around distributed ledger technology, or people would know it commonly as blockchain, I think is really, really exciting. But it is emerging, and there's a lot to be done over the next couple of years.
And what do you mean, for the benefits of the audience, Rob, by unstructured standardization?
Yeah, so it sounds like an oxymoron, which it probably is, right? But just basically, at the end of the day, we tend to get into a position where we have to have absolutely everything so defined, right? But there are ways in understanding and having different ways in which companies can agree to work with themselves in a way that's really, really fast, really rapid, that you're not really in a situation where, you've agreed on a way that you're going to communicate, a format that you're going to communicate in, and what's actually inside that actual protocol is really something that could be just agreed bilaterally or trilaterally between the various parties that are working on a specific project. But the actual protocol itself for communicating, that's already been agreed. It's like TCP/IP is with the internet, for example, right? So I see the standardization being more around the protocol level and actually what's actually contained within the messaging and how that actually works is being more defined around how the participants are actually going to work and produce and consume that actual information.
Okay, thank you for the context, Bob. So I think if we move on, and potentially one of the things you can cover as well during your case study and the work you've been doing on Marco Polo is this changing mindset of banks in terms of collaborating not only between themselves but with third-party vendors and other service providers within this industry. But if we come to yourself, Jeff, what strikes me about this space now is that we're no longer necessarily talking about whether the technology does what we want it to. I think everyone widely agrees that that's the case. We're now talking about it in terms of a delivery problem and how do we deliver it into this environment in a safe and sustainable manner. Obviously, every bank will have different requirements, but how do ourselves as vendors and consultants and partners, for example, and banks have to change the way we deliver, and get different stakeholders in the process to think differently?
Yeah, I mean, this is an area that I've been talking to different banks across the globe, and specifically around trade finance, but supply chain finance has similar challenges, right? In every bank, they have a set of standard requirements, but they also have each unique requirements, and this part ties back to our poll, which we said there's multiple trade and supply chain systems, and until we get to that collaboration on blockchain, right, you're going to have a challenge that these we talk about manual entry, unstructured paper, these disparate systems, and you've got different users, and so what we're seeing is there's a knowledge worker and a end user work data entry that have to get involved as well, training. So you have operations around the people, you've got the bank operations around the processes, and so it's not just bringing the technical teams in, but now you're bringing the users in to understand how they're going to interact. And then as you think about what Adriano was talking about in terms of regulatory compliance, you start to think about those teams being involved as well, because as you pull information from an unstructured data, and you see that the country is typed wrong, how do you handle that through the whole supply chain process, right? You can't feed it to a blockchain because the country's misspelled and the ledger requires it correctly. The end user needs to know if he has to correct it. Compliance and sanctions needs to know what's the correct country. And so those are the types of challenges we're seeing as we start to implement and talk about digitization and giving a delivery process through those stakeholders. Okay. And I could also talk a little bit about, ROI. Where's the most value? So when you talk about people and costs, right, we talked a little bit about the letter of credit costs and the cost tied to that. The question is it the data entry people you're paying? Is it that your workforce is going to retire and you're going to take 2 years to train new knowledge workers in your trade area? And does a system like, the Finastra Trade Innovations or an IBM DataCap Digitization feeding into Finastra help with that ROI? Or other ROIs in terms of sanction violations and sanction checks and the time it takes to do that? So those are kind of the things that I'm seeing across different banking clients.
Thank you, Jeff. And I think that there's 2 points I'll pick up on within that. We mentioned the way that banks have to change and people within operations units and corporates have to change, for example, to embrace new ways of working. But one of the challenges with trade finance is there's so many different stakeholders involved in this ecosystem that all need to be on the same page in terms of changing the way we do business. People like customs unions and customs officials, we've got shipping and logistics companies, just to name a few. So that's one of the things that we need to do, I think, as an industry, is make sure we're inclusive of all stakeholders when designing a better way to do business. The other piece I'll pick up on is the people aspect. It's no secret, I think, that we have a very experienced workforce within trade finance, and what I love about the emerging technology that's coming into this space is that it's attracting new talent and new ideas into this industry, which is going to contribute massively to the longevity and the success and sustainability of this industry in the future. It's a bit of a shameless plug, but we actually recently did a roundtable with Global Trade Review on the future of trade talent, which you can check out on their website or in the magazine this month as well. I think now if we move on to some of the real life work that's taking place, unless there are ever any other comments from my panel on what Jeff has just given us, but I think we can move on to the real life example, and I'd like to hand over to Rob Barnes, as we say, the CEO of TradeIX, to look at some of the work that they're doing in this space, and particularly how they're trying to address some of the challenges that we've been discussing in the previous 30 minutes. Over to yourself, Rob.
Sure. Thanks very much. Appreciate it, Mike. I guess what I'd like to do is just go through a real live example that we have today where we've incorporated basically blockchain technology to actually facilitate this transaction. And the customer was a very large global corporate that did not want to go into a receivables securitization program. And they had quite a diverse group of their customers that they wanted to bring into this program. They wanted to make sure that some of it was insured. They were looking at different ways that they could even do co-insurance for their own insurance captive. So they partnered with AIG, ourselves, and with one of their core banks, which was Standard Chartered Bank. And the idea that we had was that we should try and make this a real-time system so that the information was visible to all parties. So in other words, what I saw is what you saw, and there was it was highly trusted, and we needed to do this in a way that was highly scalable. So they spent the money on integrating into their ERP system, which is at the moment on-premise, but is going to go to off-premise and to cloud. And we integrated through to AIG to make sure that all of the invoices with their eligible debtors would actually be passed to AIG, and they would then go through an eligibility check. And again, all of these interactions were written to the blockchain so that everybody saw there was a single source of truth basically across the transaction life cycle. Then they would actually sell these at this stage. They were being sold on a pre-prescribed date each week, but that will actually soon move to be more dynamic. to Standard Chartered Bank. Now, Standard Chartered Bank knew that when they received the actual sale that had been insured, that AIG had done the individual eligibility on all of those receivables that were included as being eligible. They had confirmed that they were eligible, and therefore they were able to finance their this book at a much more aggressive rate, and more importantly, they would have access to information should something go wrong, which basically goes back right to the source, being the ERP of the large corporate. So they would they'd be able to forensically look at the actual data from ERP through insurance, through the request for funding, through funding, and then through to the maturing process as the customer, which was servicing the receivables, actually applied cash as they would in a normal large securitization. And this was able to give everybody greater visibility. It was very, very fast. We decided not to incorporate and trigger payments. We basically, the bank being SCB, confirmed payments rather than being triggered, but we've got some great plans for that and how that's going to be triggered through smart contracts in the future. And now we're at a stage where we're actually scaling that program with the corporate this year, and we expect to have several $1 billion worth of transactions flowing through this particular use case, which is now moving into production. So it's an example of something that's gone from a POC to a pilot to actually now going into production. The other thing I'd say is during this process, we also started working with approximately 22 banks, actually soon to be more, with a project called Marco Polo. And the idea with Marco Polo was to try and drive collaboration through the banks so that we could agree on the ways in which we could actually create trade as a platform. So a lot of the banks wanted to move away from having multiple applications inside their back office, which makes it really confusing for the customer. It's also becomes a compliance nightmare, as larger operational costs, etc. Obviously, we decided at the beginning that it was easier for us to focus on open account, which we did, which the use case that I just gave you, or the case study that I just gave you, does focus on. But the idea is that where we're heading is to have a trade as a general platform, which really allows the bank to orchestrate both letter of credits, payment guarantees, supply chain finance, buyer-led programs, supplier-led programs, ABL lending, all through a common platform, right? Which basically gives them the ability to connect out through APIs and using blockchain technology to a wider ecosystem, which could be logistics providers, port authorities. It could be people like Acuity or Thomson Reuters for sanctions checking, etc. And obviously the insurance companies as well, which are really an important part of trade and actually providing mitigants, particularly for things such as open account trades. So they sort of happen in unison, and I think we've made massive progress with the banks really, really cooperating in a way that I've never seen before, because obviously everybody wins if we get this right.
Okay, thank you, Rob, for that insight. Carry on.
So I think there was a question about how many suppliers the client have. Okay, so when we did the initial POC and that, we did a very, very small number, so it was less than 10, right? Where we're going with this, the number is going to be really quite large, like to begin with in the hundreds and then moving much larger than that. So, it is selected clients to begin with that they've got, so it is kind of selected at the beginning, but we will be going much, much larger than that. And we are actually working with and talking to now with our relationship with Standard Chartered Bank. We have, access, and we're talking to a number of other very large corporates that they want to expand this out to as well. So it's very exciting, but we've certainly been led by both our partners in AIG and Standard Chartered. And I also say that AIG have a number of large corporates that they work with that also want to look at this type of program as well. So we're there to support them and hopefully grow into other customers now that we're going live in production.
Thank you, Rob. And I'm sure that with the attendees on the webinar. If anyone does have any further questions or would like further information, then you feel free to contact the group, and we'd be happy to put you in contact with the correct people. So thank you very much, Rob, for the insights, not only into what TradeIX are doing and the distributed ledger technology, but also specifically around Project Marco Polo and how you're looking to conquer some of the challenges that we've discussed previously in the panel. I think to wrap up, and before we go to any question or answer and some final thoughts from my panelists, just to give a perspective on how Finastra sees this industry in particular. If my colleague can move the slide on, we'll see that there's undoubtedly multiple vendors and solutions available within this industry. And you'll see on the screen that we've grouped some of these, but this is really only a small subset of some of the vendors that are doing some great work within this space across the various different elements. We at Finastra realize that 95% of innovation is not going to come from within our own company. It's going to come from external sources, and it's our duty as a company to make sure that we can consume information from those other services and link in with those services as seamlessly as possible through the likes of open APIs and microservices. But we're also rapidly developing our own partner network, again, realizing that we wouldn't want to develop everything in-house, nor would we have the means to, because again, that would stifle our thinking and the innovation in the industry as a whole. What we do is partner with different vendors and companies within the individual spaces to enable us to grow our ecosystem of value-add services that we can offer to our client base. On the next slide, you'll see that actually from a Finastra perspective, we have very good coverage within some of these areas, not only for ourselves and our partners in the payments and cash space and supply chain finance and trade finance spaces, which we're well known for, but also through our partnership with SDocs on the electronic original documentation side. So SDocs are one of the market leaders, or the market leader in electronic original documentation, and really digitizing the current paper process to allow documents of title to be transferred seamlessly and quickly without the need for couriers or paper versions. They're also looking at moving what they do into the distributed ledger space and working with their own partners in emerging technology to make sure that they cover as much of that documentation and transport process as possible. Within the data capture and sanction space, we believe that around 60% of the cost of trade finance in banks is in the sanctions and compliance space. And so we work with the likes of Acuity Fircosoft and have an integration with their solution from our Trade Innovation solution for sanction screening, but also through our platform as a service initiative, which we'll talk about on the next slide. We also work with Compend, who are working with some of our clients to take data from paper documents or from electronic versions of documents and put those through rules engines to allow decisions to be made or sanctions checks to be made on the information within those documents. In terms of how we actually go about expanding the ecosystem and expanding the services that we can offer to our client base, we have a platform as a service platform which is called FusionFabric.cloud. And what this means is that we can link our own internal solutions such as Trade Innovation, our trade financing back office system, into this platform that allows people to build out functionality on top of that. So, that again, we believe that the majority of innovation won't come from within our own company. It will come from external sources. And really, we want to create a black box where the likes of consultants and partners can build on top of the functionality that we can provide through those APIs. The likes of banks, students and universities, but also potentially other fintechs or even competitors could utilize what we do as a core, but build on top, similar to the way Apple works with their iOS system and their App Store. So this is the way that we see the world working in terms of expanding our own offering to our clients. So that's from a technology perspective. But again, we touched on it earlier in the panel. Really, the technological and regulatory elements are only portions of what we really need to look at in order to make digitalization in trade finance truly work. The network is what is also required, and that's what the likes of TradeIX are building through their Marco Polo initiative, and we're building at Finastra this network of vendors and fintechs that we can interact with. But from a cultural perspective, we also need to manage the change within our industry appropriately to ensure that mass adoption takes place. And I love this quote from Henry T. Ford, where he says, if I'd asked people what they wanted, they would have said faster horses when he was looking at designing the motor car. And ultimately, again, in some ways, if you ask the industry what they want, it would be to do things cheaper, faster, stronger, and more securely, but utilizing the same processes. And that's really where digitizing trade finance sits, whereas actually what we're now talking about is how do we utilize emerging technology as an enabler to change the way we do business and create new business models. But in order to do that, we need to include all of the players within that ecosystem and bring them along the journey in order to be successful. Moving from a largely paper-based process to intangible digital assets in one go is potentially going to create trust issues within the network. And to use an analogy, it would be like going from a pure cash society to a pure Apple Pay or electronic payment society without moving through the likes of debit cards and credit cards and tap and contactless payments, and actually moving through people through the various stages of the industry. Ultimately, we need to think in terms of the business problem that we need to solve rather than technology. The technology is an enabler for us to do a huge amount and change this business a huge amount. But as technologists, we can fall into the trap of trying to shoehorn technology into business problems rather than looking at the business problem we're trying to solve and utilizing the technology that's out there, whether it's existing technology or new technology, in the best way drive change. And ultimately, we need to make people an integral part of the thought process, right from banking operations staff who are used to using paper documents and checking discrepancies in trade finance manually, through to customs officials and port authorities who are used to physically stamping documents when they're received. These are all the different stakeholders, along with the banks and the corporates and other people within the industry, that need to be brought along in this journey in order to ensure mass adoption and standardization of the way we do business and in trade finance. One of the other things that in particular we at Finastra are working on is with the World Trade Board and the World Trade Symposium, actually looking at how we move this industry on in terms of sustainability of trade. We mentioned it earlier about sustainability of talent and sustainability of people, but also the provenance of goods, looking at changing regulations and what we need to do from a regulatory and standardization standpoint to make digitization and digitalization of trade truly a reality. So we at Finastra are working with the World Trade Board and other parties, specifically on creating digital standards for trade that will hopefully work in tandem with the likes of EUCP and the other rules that are available to ensure that transactions that are taking place via this method are done in a safe and sustainable manner, which I think is what everyone within the industry would ultimately want. So I can see we have around 9 minutes left on the panel today. So first of all, thank you very much for your attendance wherever you are in the world, whether it's early or late for you. And going back to my panel before we move over to potentially some Q&A, final thoughts, where do we predict that the evolution of trade finance will take us in the next 3 years? What will have developed? For example, is this the year of distributed ledger technology really taking off? I'm sure Rob Barnes hopes so, but I'll leave that over to the panel. And perhaps we start with yourself, Carol, and we move through the other 3 guests.
Yes, I think what I see in the next 3 years, I would definitely see more competition in the trade finance and supply chain finance space. Yeah, because based on what we have been seeing, we're seeing, bank or fintech company was adapting the latest technology, go for more open infrastructure architecture and, leveraging the IoT to gathering data, which will allow, new type of financing solutions going to be available, and that will make this space more competitive. The other thing I'm seeing is that there's going to be more collaboration. I think, bank or fintech company all realize that just like what you say, we cannot do it all. In order to serve your customer end-to-end need, we will see more collaboration between competitor or third-party service provider. Okay, and the last thing, I see definitely is going to be a more inclusive, the ecosystem is going to be more inclusive because it's going to be more accessible, enabled by, the cloud-based solution, the API, those things. So it's no longer just, the large corporate space, especially in the supply chain finance, we're definitely seeing the opportunity to including the SME market in this space as well.
Okay, thank you, Carol. And over to yourself, Adriano.
Thanks, Mike. I think if you look in the future here, the next 3 years, definitely we're going to be seeing more technology provider coming with more solutions, and hopefully in 3 years' time, the banks, technology providers, and clients, they have approached a common agreement how to drive this initiative forward. We're talking about the open account. I think distribution ledger technology will be growing. Pricing will be more competitive because not just bank will be keen to fund those programs, but also investors, insurance, and other types. This is what I think the future looks. But one thing I want to comment here, and I saw a gentleman, Gary, mention on his questions, and I agree with him. We know open account grows fast, supply chain, receivables, finance, but one of the key things is technology will be advancing fast. Platforms will be advancing fast. But one thing we got to be careful and make sure it is also grows and develops is education of clients, banks, technology on trade finance. We talk about BPO, Bolero in the past, and sometimes we go back to the start with traditional trade documentary credits. So I think, Jeffrey, you and Mike mentioned something very important. The knowledge sharing in this space needs to be improved within 3 years. Otherwise, we're going to have an issue on the industry because we can have technology, but we need people to drive the solutions as well.
Right.
Yeah.
Thank you.
And I think that's the bridge here, right? Is we're trying to take letters of credit, SWIFT, and trying to move that to a digital space. and I'm looking at the Q&A, and there's questions about SWIFT and ISO, and I think when people on the phone talk about the letters of credit and the bank schedule, and you start to think about the variation in that, blockchain will help, right? Not everybody will be joining those networks just from a financial perspective if you think of blockchain and every producer having to join. And these intermediary areas and digitization will help, as well as standardizing maybe that communication across the banks, right? In 3 years, if we're able to sort of communicate and say, what is 46A, and make sure that, people talk to each other and make sure that there's easy ways to interpret that so that it's easier for these new knowledge workers to come on and interpret it, will help speed that transition as well as speed the digitization of that process of the letter of credit. An interesting thing that I heard in talking to clients is that, first time a new type of term goes into one of those, it becomes a new thing and everybody has to figure it out. After a while, people copy and paste in the next trades. It all of a sudden becomes a standard code language. And I think that's part of that communication process where as you're training and the banks create standard, and maybe the Marco Polo network or some of these other blockchain and some of these consortiums are driving that change to what the standardization is, and the others will follow.
Great. Thank you, Jeff. And I think finally over to yourself, Rob, and we can actually cover some of the questions that have been asked on the forum as well, particularly from Gary at PNC Bank. So thank you for being proactive on our questioning mechanism. So I think first question for you, Rob, what functionality has been built by TradeIX in terms of payments and accounting for downstream integration?
Yeah, that's a very good question. I mean, first of all, I think really the emergence and the use of very sophisticated APIs, RESTful APIs, is probably more important to us right now than necessarily the blockchain is. Although, I say that, but I can have a counter argument to that as well, which is just the amount of work that we're doing with DLT. So the API integration and how APIs are produced, consumed, and the tools where you're talking to systems which basically have no way of either producing to or consuming from an API, and allowing those to be able to receive anything from them so that we can actually then interface them to a core platform, is some of the technologies that we work with every day, and they are there. And the work that we're doing with Finastra, for example, helps as well. And their strategy around their platform as a service is, I think, is very exciting. So there's a number of ways we look at working out as to how we actually interface with some of the back-end banking systems, and also not only the back-end banking systems, but also out to the wider communities, insurance companies, logistics partners, etc., but predominantly as APIs. I think another question that was asked was about blockchain being around. How long do you think to be adopted? Well, it's actually been adopted now. We've moved, if you think about it, 2016 was all about, will this work and POCs. Last year was about moving some of these into pilot, right? And this year is around moving into production. So we have a number of banks that are going to be moving through pilot to production as this year goes forward, but doing POCs has sort of ended at the moment, unless it's something very, very new that needs to be tested. So I think, blockchain is just naturally going to evolve. Now, obviously, it is an evolving and an emerging technology, so therefore, it will mature over the next 2, 3, 4 years. But right now, there's enough benefits that can be, and the ROI could be quite substantial for trading partners to actually participate in using DLT as a way of having a single source of truth and and understanding the provenance of the underlying transaction. I also believe it really helps with regards to compliance in quite a significant way.
Great, thank you, Rob. And unfortunately, as much as I'm sure we could talk about this for another hour, we have run out of time. So I'd like to first thank my panelists, Adriano, Rob, Carol, and Jeffrey, for joining me today, and also thank those attendees who not only viewed the presentation and listened to the discussion, but also submitted some questions. So if you have submitted questions, rest assured, if we didn't have time to answer them, we will get back to you and answer those offline. But that's everything from myself, and I'll hand back over to Sabra to close.
Sure. So thank you again for joining us. We will be distributing the slides and the recording of this webinar later this week. Thank you. Have a good day.